If you watched the video about the 4 levels of trader evolution, there's a good chance you realize something uncomfortable. You're not a beginner anymore, but you're not constantly profitable either. And that means you're probably stuck at level 2, the system collector phase. And in this video, I want to show you exactly why level 2 is where the most traders get stuck, why it feels like progress even when it isn't, and most importantly, how to break out of it. This is not about finding a better strategy, it's about changing how you understand the market. Level 2 is a dangerous level because it feels productive. At this stage, you understand indicators, you understand basic market concepts, you have the know-how to place trades, and you've probably had some winning streaks, so naturally you think, I just need the right system. And that's where the trap begins, because every time the strategy stops working, you don't question the market environment, you question the strategy. A few losses must be in the system, choppy price action must be the wrong setup. So you switch again and again and again. Here's the real problem with level 2. You're focused on rules, but blind to behavior. You know entry rules, exit rules, indicator settings, but to get to level 3, understand why price is moving, who is trapped, where liquidity is sitting, and when conditions are favorable for you as a trader. So your execution at level 2 becomes mechanical, but not strategic like in level 3. And mechanical execution without context is just automated guessing. Now I want to show you an example of how level 3 traders see the market for you to better understand how this looks like. Right here we are on the BTC 5-minute chart, and we are right before the US session starts. And what happens when the US session starts? The big players come in, which often leads to volatility, to big price moves, and we want to participate on this. So I will have a close look, especially on the first hour of the trading session, which is called the opening range, because afterwards often we have clean levels we can work with and look where we can find an entry. Let's start. Okay, here comes the volatility. Massive candles, and now it gets interesting. What happened right now? We took out this level right here, which is the current day low, which was the current day low, and right afterwards we pumped back above and closed above. This is a liquidity grab. What market did here is he grabbed the liquidity right below this low and then pushed in the other direction. So market makers grabbed the liquidity and now they want price go in the other direction. Easy, it's their exit liquidity. And this is also a great spot to look for a long entry in this case. Let's see. Yeah, now we confirmed a Morningstar pattern, a very strong candlestick pattern with a close above the previous candle, this pin bar with a long wick, which also led to the liquidity grab. And this is a strong long entry signal because this candle closed above this candle, and that's the confirmation for this pattern. So now I would like to enter a long trade and place the stop loss below the pattern. And now I'm thinking about a target, and for me it's clear that this is my target because this level and also the current New York high is already an area of liquidity, because many traders will have placed their stop loss right above here, and for sure market makers like to grab this liquidity to use it as an exit, and that's why market will probably go up there. That's my target. Let's see what happens. Okay, yeah, market reached the target right here, and this would have been a very well trade, honestly. And now the first hour of the trading session is over, so we found the opening range with the high here, and right afterwards price reversed a bit. And now I want to see how price reacts between the opening range high and the opening range low to maybe find another entry. Let's see what happens next. We're ranging a bit inside the range. Everything fine, no clear signals. And then we have the breakout. The breakout above the range, and this time we closed above the range, above this level right here, and that's why it's in this case not a liquidity grab, it's a confirmed breakout. But as a third level trader, we know that a resistance that got taken out turns into a support, and we want to see a retest of this support before we think about a long entry, and a continuation of this uptrend we already started here inside the opening range. Let's see. So here comes the test of the support, and this green candle right here closed above the opening range high, which is the confirmation for the pullback. And yeah, we could enter another long here. Let's place it above this previous candle here, and then we have the previous day low as a nice target up here, because we know this is another area of liquidity where traders place their stop loss, and market makers will probably push the price up here. Let's see. No, not now, not now. Here it is. So this worked as well. You see this nice uptrend after the pullback, continued perfection. This is how third level traders see the market and analyze the market, and also find entries. And by the way, this indicator displaying the opening range and also nice levels you can use for stop placement and also for take profit placement is completely free for you. You just need to book a strategy call with our pro traders from our Day Trading Academy. Also, the strategy call is completely free, and our pro traders will have a look where you're currently at regarding your trading, in which stage you are right now, and at the end of the strategy session, you will have a clean perspective what you can do to get to the next level of trader evolution. So it's definitely worth it, and everything for free. And if you join the call, as I already said, you will get access to this indicator on top. The link is in the description below, so it's up to you. Now let's continue with the video. To escape level 2, one mental shift is required. You must stop asking which strategy works best and start asking what is the market doing right now. This is the exact shift from I trade breakouts to I trade breakouts only when volatility, structure and participation supports them. From this setup has good stats to this setup fits the current market environment. This is where traders move from level 2 to level 3, from system collector to market observer. Let me give you a simple practical framework to break out of level 2. Step 1. Choose one setup and then freeze it. No optimization, no tweaking, no just one more filter. Pick one setup and lock it in for at least 30 trades. Your goal is not to improve the setup, your goal is to observe the market around it. And here's step 2. Start journaling the environment, not just the results of your trading. Instead of writing win or loss, start writing things like trending or ranging market, high or low volatility, clean or choppy market structure, time of the day, or even news or no news. This trains your brain to see conditions, not just outcomes. And here is step 3. Learn when not to trade your setup. This is the breakthrough moment. Profitable traders don't make money because they trade well, they make money because they don't trade on bad conditions. The fastest way out of level 2 is learning when your strategy should be inactive. For example, right before a news event. Okay, here's a very nice example for you guys. We're on the Bitcoin 5-minute chart right now, and we are 5 minutes before FOMC. So the next candle that will come here will be the FOMC candle, and it will probably come in with high volatility. But first, we want to have a look at the situation right before FOMC. And here we have this low, and we have this high. And traders who think, oh, I know there will be bad news, so I'm short, I will go short and I will benefit on this down move, and I'm expecting something like this. And the other side, the traders with a stop loss below this low, they're thinking, oh, I know price will go up, there will be good news, and that's why I'm 100x long, because I'm expecting something like this. And what do you think, guys? Do you think this will happen? Let's see what the FOMC candle brings. Here it comes. Oh, that's really sad. All the traders with their stop losses above this high got stopped out first, and afterwards all the traders with the stop loss below this low got stopped out as well on this candle. They both got scammed by the market. Please guys, don't be one of these traders. don't be one of these traders. Just stay away from trading news events. It never works. Maybe 1 out of 100 times, and that's not enough. So this is a perfect example of what happens nearly all the time. So please stay away from news trading. Level 2 is also where most traders misunderstand indicators. Indicators should not tell you what to think. They should help you execute consistently once you already have context. At higher levels, tools are used to reduce emotional noise, standardize execution, or confirm conditions, not to replace market understanding. So if you're stuck at level 2, remember this. You don't need more strategies, more indicators, more rules. What you need is fewer setups, deeper observation, better context awareness. The moment you stop collecting systems and start studying market behavior, you leave level 2 behind. And that's when trading finally starts to feel quiet, controlled, and relatable.